Hello guys, welcome back. Brad Tipsy here, and in today's video I will show you how to use time frame coordination to catch snipers entry like this. So last time in the last video I talked about time frame coordination, but in Swahili version. But some of my subscribers asked me about they want me to do this time frame coordination video in the English version, so I decided to do this video and I hope you will enjoy it. So when we talk or when we say about time frame coordination, we mean it's the combination of different time frame that can help us to make decision in the market. The combination of different time frame that can help us to make decision in the market. And this time frame coordination, we have only two groups, or I can say types of time frame coordination, or groups. I can say groups because this is time frame that combines to give us the coordination, the actual coordination. So those group are, we have, say, time frame coordination, we have constant, and we have situational time frame. So when we say about constant time frame, these are the time frames that give us the real market direction, and also their behavior or their direction doesn't change time to time. They just use long time to change. So these are the one that give us the real trend, can say, or true trend. Sorry, true trend, or real or true trend. But the situational time frame are those which they follow what constant time frame says. When I say they follow what constant time frame says, it means that, let's say we have maybe or this is the 4 hours maybe, or daily time frame, and this is our area of liquidity. So what we know is that the market must come to this area to take some liquidity, so in order for it to buy again. So in the lower time frame, let's say this was the 4-hour time frame. In the lower time frame, according to the coordination, there are time frame that must change, maybe the character, or maybe took the entry at this point. So when you took the entry at that point in the maybe any time frame, according to your time frame coordination, you will set the market. But if you reach to the constant time frame area of liquidity, I mean 4 hours time frame, because 4 hours time frame is the highest time frame than the one that you use to take this trade here. Maybe you use 30 minutes or 15 minutes, I don't know. But if you use maybe 30 minutes, you will sell in the 30 minutes time frame at this liquidity engineering here. But when you reach in the 4 hours time frame area of liquidity, you have to change your direction, because the market always respect the higher time frame direction. So that's why I told you that I'm saying that if this situation time frame must follow the direction of the constant time frame. So we can say this is the phasor. Maybe we can use that example. This is phasor sun, maybe. So if the phasor says something, son or daughter or a child, any must follow father law. So yeah, so after saying that, let's see this constant time frame. We see the constant time frame, the situation time frame. But when we say about constant time frame, we have only two constant time frames, in which the first one is the monthly constant time frame. This is the first constant time frame, but also the second one is the weekly time frame. So the monthly time frame has its situational time frame, that is combined with to give us the coordination, monthly time frame coordination. And those time frame coordination, those time frame is from monthly we have a daily, from daily we have 1 hour, from 1 hour we have 15 minutes, and from the 15 minutes we have 5 minutes. This is the monthly time frame coordination. Sorry, let's remove this 5 minutes. This is the monthly time frame coordination. But also in the weekly time frame we have some situation time frame that weekly combined with to give us the coordination, which are weekly we have 4H, and after 4H we have 30 minutes, and after 30 minutes we have 5 minutes. So this is the time frame coordination of the weekly. So this is the weekly time frame coordination, this is the monthly time frame coordination. So if you use monthly as your constant, it means you will follow its coordinated time frames, like daily, 1 hour, 15. You can't came from monthly and then if you use monthly, you don't have to use these 4 hours. Yeah, it is risky because monthly can offer you the buy position, 4 hours can offer you this sell position. The same if you use daily, you don't have to use you don't have to mix these two coordination, because they don't. If you do that, you will be out of the control, so the market can stop you out. And then because this time frame monthly can offer you another bias, but this also can offer you another bias. Sorry, my English is not good, but try to understand. Okay, so after knowing this time frame coordination, what I can say is that many traders, they trade intraday trades. They take to intraday trades. So if you want to take intraday trades, you can't use monthly as your constant time frame. But also if you want to take intraday trade, you can't use 4-hour weekly as your constant time frame. So what to do if you want to trade intraday? You have to break this coordination so that you can get the coordination that will help you to trade these intraday trades. For instance, if you decided to use monthly as your constant, it means daily will act like as the situation one. But if you decided to use daily as the constant time frame, 1 hour will act as the situational time frame. But also if you decided to use 1 hour as the constant, it means 15 minutes will act like as the constant at the situational time frame. So it depends on which constant time frame are you trying to use. If you're trying to use monthly, it means daily will be your situation. If you want to use daily as your constant time frame, it means 1 hour will act as a situation. And if you want to use 1 hour as your constant, it means 15 minutes will act as a situational time frame. The same in the weekly time frame coordination. If you use weekly as your constant time frame, you have to use 4 hours as a situational time frame. But if you use 4 hours as your constant time frame, you have to use 30 minutes as your situational time frame. But if you want to use 30 minutes as your constant bias, it means 5 minutes will act as a situational time frame. So what to do here is that is how you have to understand. So you will decide by yourself either to use, if you want to trade a good intraday trade, just use daily time frame. a good time frame to use to trade intradays, but also you can use 4 hours to trade intradays if you want. Yeah, but if you want to trade intradays, you can use these 2 time frames. There is a daily in the monthly time frame coordination, 4 hours in the weekly time frame coordination. So if, let's say, if you use a daily time frame, it means you will start with the D time frame, and then 1 hour, and after 1 hour you have 15 minutes. After 15 minutes you will add 5 minutes here. You will have 5 minutes there, because 5 minutes, 3 minutes, 1 minute, those time frame are universal. They can share with monthly time frame coordination, also weekly time frame coordination. So if you try to use the daily time frame coordination, so you will use this structure here: daily 1 hour, 15, 5 minutes. But also if you want to use weekly, it means you will use 4 hours, your constant, 30 minutes as your situation 1, 5 minutes as your situation 2, and you will add 3 minutes as your time frame for refinement. So after knowing that, let's try to see some example. The first one is the gold. This gold here that we managed to take this entry. So let's see, this entry was taken in the 1 hour break of the market structure, but also we had this break of market structure in the 4 hours time frame. So if someone used the 4 hour time frame, also can get the same entry. So let's say we use 4 hours time frame. You see we have this formation, we have this break of market structure. After that, let's go back to the 30 minutes as the situation 1, because we use 4 hours as our constant. So in the situation 1, what you find inside this area, you see you have this formation here, in which this point is the validation, and also this is the invalidation. So we will mark that area, and then we will go back to the lower time frame to see if we can find another example, maybe if we have a lowest area of liquidity. But when we go down, we see this was the formation that is not been mitigated, so you can use that at the entry point. But when you measure your stop loss, maybe from this point to this point, you can see this is a lot of pips, almost 100 pips. So you can't use, or you can't risk that amount of pips. So we will go back to the 3 minutes maybe to see if we can find another lowest liquidity. Yes, we don't have. But when you go back to 1 minute, what you can see inside this 1 minute time frame, what you can see inside this area 1 minute time frame, you can see that we have this formation here. This was the formation, but inside this formation we have this liquidity engineering, this point here. So we can use that because this liquidity engineering offers only 80 pips, so we can use that as the entry point. So what you notice is that I marked my break of market structure in the 4 hour time frame. After marking the break of market structure in the 4 hour time frame, I followed the rules. I followed the coordination. Go back to 30 minutes to refine, to find maybe either formation or liquidity engineering and whatever. So after going down to the 4 hour time frame, 30 minutes time frame, we find an liquidity. We have the formation that was here, but when we go to 1 hour time frame, we found that we have another inside formation, and also offers the liquidity engineering, and that is where we take the trade. So here is where you will put your entry, and the first take a profit will be at the turning point where the price here, this will be our first take profit, and then let's say we risk only 15 pips like that. So let's see if the price react to that point. Let's see, as you can see, the market reacted, and now the first take profit was triggered, and now you can see the gold buys up to, you see, yeah. So that is how gold was traded by using timeframe coordination of the buyers. The another entry was AUDUSD. We trade the AUDUSD. We see this AUDUSD from the daily. We take this trade from the daily time frame. As you can see, we had this break of market structure here. I mean change of character here. After having that change of character, what we have to do is just to wait for the market to reach at our point. Let's see. So because we are using daily as our constant, it means our situation will be 1 hour. So we will go back to the 1 hour time frame and see what we can have inside that change of character. And a good way to trade the reversals entries, just use the daily reversals. Don't trade 1 hour reversals or 4 hour reversals. It's very, very risky. But if you find the daily reversal, you can use that because it's the highest time frame, the higher time frame. So we mark this formation here. We are waiting for the market to react at this point, to come to this point. So this was the 4 hours. Let me go to 1 hour according to our time frame coordination. But what you see inside this area is that we have another formation, this one. So we will mark that formation and wait for the price to reach at that point. You see. So when you see, what you see here is that the market came but didn't tap our entry. So let's wait again till the market taps our entry. The market went up. Yes, the market went up, still didn't enter to this area of liquidity. It just tapped above the point but didn't enter the area of liquidity. So we have to wait till the market reaches to that point. You can see, and then I think in the last video, I showed you how to use the confirmation entries to trade the confirmation entries. So I know everyone knows what to wait. So let's wait for the market to reach at that point. Let's wait here. Yes, so this was the high, this was the low, the 15 minutes, but this was the high. So here is where we want to see the market change its character, and we will see if we have the change of character with the inside formation. We can use that inside formation as our entry. If the stop loss is it is friendly to us, we can use that as the entry. So what happened here is, you see, the market created the inside formation, also change its character at this point. So this was the entry. We use this, and some of my students knows why we took this entry here. So here is where you can put your entry, and let's see if the market, how many stop losses. You can see it's all 15 pips. If you put 15 pips at this point up, there is where you can take your buy. So let's see how the price reacted. can see the price reacted and then goes up. The first TP will be this one, because this was the turning point. The second TP will be at this point, and the last TP will be at this point. But what you can see is that this pair lands, and we took this trade, and it was, the last TP was 94 pips, but also the trade went to about 152 pips. So you can see how this trade was good. First, we just wait for the market to react at that zone, and after they react, we just want to see if the market changes the character. After the change of character, and then the market give us the formation, we will use that formation as the entry. That was the first entry that we took in the this AUDUSD pair. But what you can see here, after taking this entry here, the market also breaks this high here. So after market breaks this break of market structure at this point, left us with this formation. So you can use it to trade another, because this is the confirmation. This is the market is already confirmed, because we had the change of character, but also we have the break of market structure. So if we have this matured 50, you can trade. Even if you want to trade aggressive, will be okay to you, but just be careful. So what you can see here is that after this break of market structure at this point, the market gave us this formation here. So we will mark it, and then you go to the lowest time frame. That the lowest time frame, according to our time frame coordination, as we know, is the 1 hour time frame. So when you go to the 1 hour time frame, what you have to see is just the market. You have to find the lowest liquidity that is not yet mitigated, and when you go back to the lowest time frame, you can see that we have this liquidity, we have this formation here. It's already consumed, but not 50%, and this is where we take our entry, the first entry. So after marking this, just go again to the lowest time frame according to your time frame coordination, the 15 minutes. When you go back to 15 minutes time frame, what you see here is that you have this liquidity here, but it's already tapped a little bit, like you see. But also you have this formation here, but tapped but not 50% consumed. So just mark this area, and then just go down again to the lowest time frame. Let's try maybe 3 minutes. Let's go to 5 minutes first. And when you go back to 5 minutes, what you can see here is that you don't have the clear structure. Let's go maybe to 3, maybe. Let's see. 3, maybe. Yeah, 3. Let's see. We can find the lowest liquidity. Don't have. So let's cut this area here. Let's cut this area here. Let's go back to the 1 minute time frame. And in the 1 minute time frame, you have this liquidity engineering, which is not consumed here. So you no. But also you have this one. Also, this is not consumed, and that you can see we have this flip here. So the market will come, maybe will come to this formation here. So just mark that formation, and what you can see is that we only got 3 pips. So you can put maybe even 10 pips, maybe 10 pips like that. And then let's go back to the 4 hour time frame. Let's see if the market, don't know why. Anyways, don't know why the price. Okay, so let's play the chart. So just remove this one. The market went up after taking the first entry at this point, and after going up like that, the market came down again. And as you can see, if the market took our entry here, the take profit, the first take profit will be here, the second take profit will be at this high here. How many pips if the market hit our last take profit will be, let's see how many pips. We will have 161 pips. So here, so let's see, the market reacted and then also tapped our take profit, as you can see. So this is how we use the time frame coordination to take these these entries. But also we have GBPAUD entry. Also we took this entry from the daily, and this entry was like this. We had this change, break of market structure at this point here, and after this, we have the break of market structure at this point here, this up here, this point here, and after that we had this formation inside the formation. We have this inside formation and outside formation. We have this one, we have this one. So in case of this, when you find two outside formation, inside formation, just don't use the outside formation directly. Maybe you can use it by using confirmation entry, not the aggressive, because always use the structure that are found inside the area of liquidity. And when we say the area of liquidity, we mean after the break of market structure, it means above this point, between this point and this one. This is the area of liquidity. So we will go back to 1 hour to see if we can find any liquidity that is lower. And when you go back to 1 hour, what you see is that you have multiple choices like this. You have this formation here, you have this one. But what I like to do is that I will mark the formation that is not completely consumed. When I say completely consumed, I mean not consumed 50%. So what you can see, this one was the formation that is not consumed 50%. So after that, we will go down to see if we can find another lowest liquidity. And then if you go maybe to 15 minutes here, you can see that we have still we don't have the lowest liquidity because this is already consumed. So let's maybe use this 5 minutes here. Use this 5 minutes here. Yes, you can see that we have this formation here which is already consumed, you can see, but this was not consumed. This one was not consumed. As you can see, the market didn't tap that liquidity, so we will use that liquidity, and then our stop loss, we will put it below that point, and that stop loss will be maybe, let's see how many pips, 13 pips. So you can use that as your entry, and when you go back maybe to the highest time frame, maybe, let me see, this is the, yeah, you see we started by using this structure, and that is how you have to trade liquidities, stuff like that. So you can see price try to come to this point, but if you trade this area, you can use this change of character. You took this entries, maybe after taking that entry, the market, remember that the market wasn't breaks the daily time frame. So once the market breaks the daily time frame, the market will come for the remaining entry. So let's see. Let's see how the market reacted. As you can see, as normal, as usual, you just put your take a profit at that point. First you take a profit. Yeah, you can see the market went, and then activate our take profit. So that is how GBPAUD was traded. After that, we have also EURGBP. In EURGBP, we have this structure here, we have this trade here, and we took it from the monthly time frame. Daily time frame. We took it from the daily time frame. Let's cut here. I will show you how we do it, how we did it. What you can see here is that we have the daily break of market structure with the formation. This was the daily break of market structure, but also this was the daily formation here. This was the formation. So once you know this is the formation, you just use your time frame coordination as usual, daily, 1 hour. So just go to 1 hour time frame, and what you see is that you have this big candle, lower candle. So just mark this structure, and wait for the market. Just go down to find it. You can maybe get some liquidities that are below there. Yeah, now you have this formation here, so you can use this one because the pips, the stop loss was very smaller, 15 pips. You can use that at the entry, but if you want to go further, maybe 5 minutes, you can use this formation here, which is not yet consumed, and that is how you can that is where you can wait for the market to come, because can see we have only 4 pips, so we can use that as the entry. So when you go back, maybe let's spray it using the forward time frame, you can see how the market reacted. Let's see how the market reacted. As you can see, the price took our entry there. After taking our entry, the stop loss was if you put 5 pips, I think you will be safe. Now 10, sometimes just use 10 because yeah. So this was the entry. Our take profit will be at this point, and the next high, as you can see, as you can see, the market went up and then activate our take profit. Thank you for watching. Thank you for having your time. Make sure you subscribe, like, comment,